Hey everybody, Smart Silver Stacker here. Hope you're doing well. Boy, what a day in the precious metals. We had the silver price, silver futures rise above $40 for the first time since 2011. And if you're joining the live stream here, welcome. Do me a favor, let me know in the chat. Can you hear me loud and clear? Everything sound good? We've got a lot to cover today. Technical breakouts across the board pretty much in the precious metal sector. Now, what we're looking at right here on the screen is the weekly chart of the silver futures contracts, which you can see right now trading at $40.75. That's this green line. Got to go back to 2011 to find a time that silver futures were at this level. Now, silver didn't quite break $40. We'll take a look at that chart in just a moment. The gold chart, also very critical breakout today. The miners, big deal. There's something interesting on the dollar chart as well that we're going to take a look at. And we'll talk about some of the factors that are driving this breakout. Now, I think what we're witnessing here is the initiation of a moonshot in silver. Now, maybe it's not the really big moonshot that, some of us have been waiting for, that we've been hearing about for a while. I think that currency crisis is still perhaps down the road some ways, but maybe we're building the foundation for that moonshot. But what I do think what we're about to see is a run in the silver price at new record all-time nominal highs. And that's going to mean, in pretty short order here, $50 plus silver. So if you want to stack some silver, now I just stacked some today. I just bought some of these actually from SD Bullion. The Cole piece silver dollars that they have on sale at spot price. Now, it's interesting that they have these at spot. It doesn't happen very often. In fact, I don't really remember ever seeing silver dollars at spot like this. But I think, to my mind, you get a little bit of a margin of safety buying at this kind of a price at spot, because even if the silver spot price drops from here, I would expect the premiums on these would rise back up, right? So that's sort of the situation here. I had somebody leave me a comment the other day. I was talking about how there's a lot of spot deals right now, and they said the premium on those is the high price of gold, the high price of silver. Well, maybe so, but if we see the price fall, this seems like, not financial advice or anything, but a form of silver bullion with a bit of a built-in margin of safety. Now, I've got a super chat here from Robert Diaz. He says, what exactly is a good gold to silver ratio? 1 to 32, like in 2011? Well, I'm not sure what you mean good for. Maybe like good as in an exit point from your silver position? Yeah, you'd probably start looking at it in the 30s, certainly like in 2011. That might be an indication that we had topped. But the gold to silver ratio is still much, much higher than that. So I still think we have a long way to run here. Now, let's zoom in and take a look a little bit closer at the action that we saw in the silver futures today. So if you've been watching the channel, we've been tracking these consolidations that silver's been trading within. That's kind of been the pattern as we see a consolidation, then a breakout higher, a consolidation, and a breakout higher. And actually, let's look at the 4-hour chart here to see this in even higher resolution. And I mean, that's the big move today. Also, you'll notice the volume here, which we got on the 4-hour chart, pretty solid volume, higher than usual, this big green candle that we got earlier in the session today. And silver had been trading within this consolidation pattern for weeks, dating back to mid-July. It broke out. We've been following this closely. It then flagged down to kind of retest that breakout level. And then it broke out of this bull flag. In fact, on the futures chart, it gapped up in a big way. That's very bullish as well moving forward. And, who knows, from here, if you look at the RSI here, that's a measure of how relatively overbought or oversold this is. Then maybe after today's rally, we're going to see a little bit more sideways movement. I mean, that's kind of been the trend, right? As you get the flagpole and then a flag or a triangle and then a further break higher. But the fact that we're now above $40 on the silver futures chart is critical. In a recent video, we talked about the Shanghai Silver Exchange. So I've got that pulled up today. The most recent data from the Shanghai Gold Exchange and their silver benchmark price 9,366 yuan per kilo. That's today's price. Now, I've already done the math. That comes out to $40.72. So still above $40 there. This was the first exchange that we saw it break above $40 on. Now we have got U.S. futures markets breaking above 40, and I suspect that the silver spot price, that's this chart right here, is the next to fall. I've drawn a line here at $40 because, again, this is a critical psychological resistance. We've talked about this for a while now, and we butted right up against it today. Earlier today, the silver spot price touched $39.96. So, not surprising that the spot price would encounter some resistance at this $40 level. It's this nice round number. I suspect that is why psychologically it's so important. And also, you got to keep in mind that over the past 50 plus years in the current monetary paradigm, the silver price has only risen above $40 twice. That was in the 1980 and 1979 bull market and the 2011 bull market. Other than that, silver has always traded below $40. So that is why, again, it's such an important level. But once we take that out on the spot price, I suspect that it's going to be a quick run to $50 plus. And, there's other factors in the precious metals markets from a technical standpoint, I believe, that tend to confirm this. For example, let's take a look at the chart of gold. So this is the 4-hour chart, and we've been watching this for some time as well because the gold price, unlike silver has been kind of slowly hitting these new highs over the past several months. Gold has just been trading sideways. I mean, ever since the April tariff lows and the recovery, gold has been trading with a series of higher lows and lower highs within this symmetrical triangle. But look what happened today. A clear breakout from this pattern on decent volume. The green candle there, decent volume. We've also got the moving averages in a bullish alignment here. Now, the RSI is over 70, so I suspect that, maybe we'll see gold trade a little sideways here for a moment. It might even retest this breakout level as what was once resistance turns to support. But the breakout here is undeniable, I think. And when you combine it with the other factors like silver breaking out and also the miners, let's take a look at the chart of the miners. We've got this is the SILJ. Let me switch this to a 1-day chart here. So the SILJ Junior Silver Miner ETF recently broke out of a cup and handle formation, a very bullish formation, and it's had very strong volume throughout this handle portion and on the breakout. Now, this white line, you'll notice that the SILJ broke above this with, some force today, up almost 4% on the day. That's a notable breakout there as well. Well, that goes all the way back to the creation of the SILJ ETF, this giant flag formation that the ETF has been trading within going back to 2012, over a decade. And today was the day that we broke above that top trend line. So that is also a very bullish development for the precious metals sector as a whole. And look at the way that the volume has been increasing recently in this trading. From here to the breakout, so the beginning of the handle of that cup and handle to today's breakout, the volume has been in a very bullish uptrend, right? Lots of volume. So that suggests that there are some legs behind this breakout. And I suspect that, the next shoe is about to drop, the one that is going to take us to $50 plus silver. From a technical standpoint, let's take a look at this. This is the GDX Gold Miner ETF, the Senior Gold Miner ETF. Now, if we zoom this out, you can see that this green line here represents the highs from the 2011 bull market in gold. Now, back then, the gold price was topping out at $2,000. Gold miners were doing well then. They were making some money. Their earnings were up. But we just arrived at that level, at the highs from the previous bull market. We are very, very close following today's run up. We're only a couple of, less than $1. Right now we're at $63.17. The highs there is around $64. So That's going to be a major technical level to overcome, and we're right around the corner from that. Keep in mind that back in 2012, the gold price was around $2,000. Today, it's closer to $3,500, and if gold, which just broke out, proceeds to move higher and makes new record highs north of $3,500, then the gold miners are going to respond very positively. The fact that the miners are finally moving, I mean, for a long time they were lagging the metals, but this year they have really been moving higher and recently making critical breakouts on their charts. That shows that investors are finally beginning to take this seriously, the rally in the precious metals. They know that it has some legs. They know that the fundamentals, which we're going to talk about in just a moment, really are supporting much higher metals prices here. So they're bidding up the miners, the producers of those commodities. And that's why these charts are looking as bullish as they are. Now, the chart of the dollar, I just want to take a look at this because this, I believe, is going to have a critical breakdown coinciding with the big rally that is upcoming in the precious metals. Now, let's zoom this chart of the US dollar index out a bit. And you can see this yellow line represents an uptrend that has been in effect for a decade plus. And we are arriving right at that level of critical support. Now, one important thing to note here, this pink or purple rectangle here that I've drawn represents a level of critical support dating back to 2022. You can see the silver, or not the silver price, but the dollar price touched this several times, once, twice, penetrated into that level 3 times, 4 times, 5 times. Now here you can see it broke down recently below this level of critical support. It touched that, was rejected from it. Looks like that support has now become resistance, and we are arriving at this critical level of support. Now, why is that so important right now? You know, with the fundamentals aligning the way they are. Well, September is going to be a very important month for the dollar and for the precious metals. The Fed is about to begin cutting rates again. They're going to open the floodgates of liquidity for the ailing U.S. economy. They're going to slash the cost of debt. It's going to pump up the price of a variety of assets, but I think this time a lot of this cash is going to flow into the precious metals because it's going to become obvious to investors that the Fed, when it comes to their dual mandate, they are disregarding the price stability aspect of things, and they are favoring propping up the ailing economy with cheap money. And that's going to mean the precious metals are going to rally, the dollar is going to tank. From a technical standpoint, when the dollar breaks this level, if it does, it's look out below for the dollar. We're going to see a significantly devalued U.S. dollar relative to foreign currencies and relative to the precious metals. Now, this appears to have been one of the primary catalysts for today's rally. There's been a lot of uncertainty coming in today. The metals, we know they're in an uptrend, but they were acting a little cautious. Investors were acting a little cautious relative to the precious metals leading up to today's PCE index numbers. The inflation data here, the personal consumption expenditure price index. Now, it did run hot at 2.9% seasonally adjusted year over year for July, but that also met estimates. So it was higher than last month's, but it was in line with expectations. And I think what markets were concerned about here was an exceedingly high inflation print, which might give the Fed pause to not cut rates in September. But since what we got was in line with expectations, it looks like the status quo is going to prevail. And when you look at the CME FedWatch tool, we're now looking at an 86.9% chance of a rate cut at the September 17th FOMC meeting. Investors realize that the floodgates of liquidity, they're coming open. It's going to be a lot of money, so they need to get into hard assets like the precious metals. And you can see that following that inflation data today, this actually bumped up ever so slightly. Yesterday it was 86.7%, now 86.9%. So now that concern about that inflation report, one of the last pieces of key data before the FOMC meeting, it's common knowledge, I think, at this point that we're seeing some economic difficulties. We've had terrible job numbers. I suspect that a lot of the economic data out there, including the inflation data, probably paints a much rosier picture than what is really occurring on the ground. And so, the Fed's going to have to intervene. We've seen this before. Now, there's also the massive and growing U.S. national debt. This is a primary reason why ultimately the Fed is going to have to cut rates because it's a lot easier to support this level of debt when the debt gets refinanced at a lower interest rate. This, we look at it a lot, but I mean, this is an important chart. This is probably one of the most important charts out there. It's the interest cost on the enormous, unmanageable U.S. debt, which clearly, I mean, anybody who knows to look at a chart knows what an exponential increase looks like. This is it. And this is really a cycle that can get out of hand because the higher the interest cost, I mean, $1.2 trillion, that's what we're approaching. That's some real money that can begin to absorb a big portion of the revenue of the federal government. And if that's the case, you can cut spending, I guess. I don't know that that's really politically viable in the United States. So the other option is you can, borrow more money to keep the spending that you have going. But you can see the problem there, where now you're paying more money in interest, so you have to borrow more money. And of course, then you have to pay interest on that borrowed money. One of the ways that you can sort of get ahead of this debt doom spiral is to cut interest rates, because then you can refinance the debt at a lower rate. How do you do that? The Fed's got to monetize the debt, right? The Fed's got to get into the market. They've got to buy up U.S. treasuries directly. This is known as QE, or quantitative easing. It's highly inflationary. It's what, previously you would have thought would be relegated to banana republics and, developing countries where the currency gets debased and you see hyperinflation. You wouldn't expect to see this kind of thing in the world's reserve currency, in the U.S. dollar. But as we know, a lot has changed over the past several years, and the dollar is not the safe haven that it was once viewed as, and people are beginning to wake up to that reality. There's a reason that gold is above $3,400. There's a reason that silver is hitting the highest price in 14 years. It's because the writing is on the wall for the U.S. dollar. Interesting to look at this chart of the M2 money supply, given the fact that the Fed is likely about to begin cutting rates again, easing U.S. monetary policy. But look where the M2 money supply is. It's already at record all-time highs. So think about that. The Fed is about to begin easing monetary policy. They're going to make it easier to take on more debt, to create more money into the system. Money gets created, currency gets created, not money. I mean, if you listen to Mike Maloney, he'd reprimand me for saying money there, because according to him, and really just according to the definition of money, only gold and silver are money. Fiat is just currency. But the point is that when you start cutting monetary policy, you create a lot of this fiat currency. It gets pumped out into the system. But we're already at record high levels of money in the system, the M2 money supply. So this is why we are seeing the breakout here, folks, in gold and silver. This is the reason that I suspect that what we're going to see in silver here is maybe a brief rejection here from the $40 level. So we had this nice rally today. We got back up to $40. I suspect that what we might see, here's my short-term forecast if you want it. And I'm not tooting my own horn here, because I've made plenty of short-term forecasts that have not panned out. But recently in the bull market, I feel like my calls have been fairly accurate. That doesn't mean that this one will be, of course. But what I think we might see here, this is just my intuition, is telling me we're going to see probably another one of these flags on this flagpole. And then this will be the final consolidation before we, I don't know what piece of news will come out. Maybe another Fed governor is going to be forced to resign or something like that, and people really get a clue that the president is going to be able to get the lower rates that he's been wanting. I mean, that's what a lot of this rally has to do with as well. And then we're going to see this, and this is going to be the rally that takes us above $40, and then it's going to be on like Donkey Kong for the silver price until we get to $50. I mean, nothing goes up in a straight line, let alone silver. Silver is very volatile. I mean, this is the trend we've seen, right? Consolidation and breakout. I mean, we can draw lots of them on this chart. Here's a consolidation. Here's a consolidation with a breakout higher. This is just how this bull market has been playing out. And so I think that we're about to see another one of these. And probably next week, we're going to see the silver spot price break above $40. And then, by year end, I believe we are going to see $50 plus spot silver price. Leave me a comment down below to let me know what you think. If you enjoyed this live stream, share it with your friends. Please do post this on social media. There's not much more time before we see record high prices for silver and new record all-time highs for gold. That's my take, at least. Leave me a comment down below to let me know what you think. Thanks for watching, everybody. Stay safe and happy stacking, and I will catch you next time. Smart Silver.